All right, welcome back. Another episode of Chart Talk. I'm gonna jump right into it. We'll start with the major indexes. So we had a little bit of a snap back last week that brought the indexes back up into this resistance area. So uh, during the Thanksgiving week, we had a phenomenal snapback, and typically, Thanksgiving week typically isn't the best for the market, but we got 5 days of the market is grinding higher, which is great to see. Again, the key resistance area really is this 690 in the SPY. And then this key support really is this 650 that has been holding up for the past few months now. Now, a few weeks ago, it did seem like we were destined to break this support area and kind of test this 200-day, but that wasn't the case. And now this is not the time up here where you really want to be chasing, fifth, sixth day up. Let the market kind of pull back in, let it settle out, ideally form a higher pivot low. Again, anything really above 650 is, kind of a win here. We are starting to see more of a broader flag forming in the index along with most of the major sectors. So it's definitely a good sign to see, this flag here, then just it breaking down and Hing over lower. So again, we had this very easy breakout market pretty much since May. And now we're starting to get this, consolidation, kind of a little bit of a topping stage, could be just a broader flag, but you have to, this was the time to buy the breakouts. And now it's starting to become the time that you want to be buying up off a support and selling into resistance when we're in this range bound market. We're trading, horizontally. This is support, this is resistance. You want to be buying these days, third day down and up. That's when you want to be looking to buy. You do not want to be trying to chase resistance in what this market is showing us. And this time from May until pretty much October, that worked very well. More recently, we're seeing that just shift to this topping pattern. Again, we're seeing the same thing at the Qs, lagging a little bit compared to the action and what the S&P had done the past week. So we want to see, them kind of get a little push higher through this 620 area. Maybe we get a little pull in and get a little flag to form, but really just focus on the S&P right now with the action it's doing. Again, Dow 30 names been, again, this was from yesterday's newsletter. This note, the easy buys in the moment rarely yield any great returns, and that's what we saw coming into today. That little fade. Again, it's just you want to be buying these hard buys. These are again notes from the newsletter sent out on Sunday. We want to be looking to buy into support and selling into these up moves, not chasing when everything looks very easy. So moving on, again, gold, starting to flag out, climbing slowly back to that 4,000. Again, expect that to still act as resistance in the short term. 10-year still kind of just bear flagging down here, 200-day kind of Hing over. We should expect to see a break of this, 4% level at some point in the new year as it continues to fade lower. So for those looking for lower mortgage prices, just be patient. They do drift down slowly, but looks good for those who want lower rates. Again, the dollar has been the little boogeyman in the closet, so to speak, as it's been setting up for this base break through 100. Again, the last few weeks, it's been showing very clear resistance and kind of pulling into this range. We'd like to see this kind of flag fail and it drift back into the broader part of this base, then tighten up here and break it higher. We don't want to see a strong dollar. And then put and call, again, nothing to note there. And VIX just falling off the face of the earth as the market snapped back last week. So good signs to see. So again, semis, starting to bounce back, still seem a little extended overall. It does seem like, again, short-term profit taking with healthcare. Today, again, healthcare we were talking about it back in the summertime, this big base when healthcare was lagging the overall market and has since played very quick catch up. But again, we are aware of these retests typically get met resistance. It had that little bit euphoric break last week, but now it's starting to pull back in, which is what is to be expected at these major retests. First major retest, you get that little push through, but often this is a great time that people want to kind of ring the register, so to speak. So keep an eye on this one. Let healthcare kind of pull back into this range and set back up, like the consumer discretionary chart that we'll get to in a moment. But like healthcare, biotechs pretty much doing the same thing. Very weak, massive base, climb back to the all-time highs, prior all-time highs. So expect, like healthcare, for this to push through these retests. This is a great area to take profits if you've been buying it all year. So healthcare and biotech stuff is leading right now. Semis and tech were the leaders, still seeing a little bit of weakness in those spaces, and a lot of the other sectors just starting to set up and base out. We've been keeping an eye on this, on the REITs for this breakout, in time that's setting up as a 200-day continues to act as support. Consumer discretionaries, like we're talking about with healthcare before, gets that retest. This is where healthcare and biotechs are in their own individual chart. They, climb back to highs, and consumer discretionary is pulled in, started to flag out, and eventually there'll be that breakout through these all-time highs after this setup. So this is where, healthcare and biotech are right now, and they need to do this to set up for that next move. So keep a close eye on consumer discretionaries, probably one of the best chart patterns out there sector-wise. And a lot of the same, industrials still flagging out. Telecom, very textbook flag here. Again, we see this run up. We see very textbook consolidation. So this is where you want to be selling into resistance, and you want to be waiting to buy back up off support. And we're seeing this across the board. We're seeing this in mid caps. You can see the very broad flag that's forming here as it's trying to break its prior high. Seeing very similar action in small caps. We're seeing a very clear flag forming in the energy sector. Again, this is a weekly chart. Very clear resistance at this 130. Energy has been very strong lately. We're just seeing higher pivot lows continue to form. Definitely want to keep an eye on consumer discretionaries. Definitely keep an eye on energy names, consumer staples, materials. Avoid those for the short term. Financials, again, look pretty weak the last few weeks, but one good weekly candle definitely can save a chart. And we see a very textbook bull flag forming for many months now in the financials. So looks great there. Again, utilities still in this range here, but really the focus is breakout financials, breakout in utilities, multiply breakout consumer discretionaries. Those seem to be the three spots that you want to focus on for some swing trading setups. So moving on to some names that we're still in. Again, still sitting in this Tesla. Again, Burry came out with his short thesis today, so we'll see if that has any effect on the stock. But for now, as long as it stays above 380 and this 200-day continues to climb, that's the out. Again, we have a broad flag here, 90-point range in this flag, just like we're seeing with the market. Can't trade above 470, can't break below 380. So eventually, if this flag matriculates higher, we should expect probably move closer like 600, given this range of this flag. Puts it, 570, 580 is about the measure move on this flag. Again, Apple was our big focus last week. Reminded us very much of Google. So I'll show the Google chart first. So we talked about Google last week of when it got back to its all-time highs and started to break out. This was the least riskiest time to get back into Google. If you bought it through those all-time highs when it was the most expensive at that time and gave it versus the more recent pivot low, you can see the gap up and flag and breakout and gap out and flag. That continues to repeat higher and higher. And this is where we try to focus on finding these swing trading names. We don't want to be battling with them down here at lows. This move from 150 to 200 took the better part of 6 months, 50-point move. When it got above its all-time highs, it's increased double that. It's increased by $100 a share in a fraction of the time. So this is why we rather buy the stock when it's the most expensive at a technical entry than battling with it when it's, breaking down and pulling into major support. So seeing what this Google has done, we're seeing very similar action in Apple, where like Google, here's the prior all-time high, here is that break of the all-time high, and then that tight consolidation near all-time highs where Apple's currently. And again, we talked about this last week through this 278 area. We originally had a stop versus 265, but all last week, even Apple up here couldn't break down, a couple dollars last week, and then it still flagged even tighter. Where now, we bought that 278. Our stop is 275. Less than 1% risk. It broke out to new all-time highs today, and we should expect that continuation higher. And if we're wrong, we get out below 270, 275. We lose barely a percent or less than that in one of the best names out there. Very tight risk, easy swing trade. We just leave the stop in and see where it goes. Similar to this Apple chart, similar to the example with Google, we have this Gilead. So if we zoom out a bit, this is going back to, the prop trading days back in 2015. This name has taken over 10 years to get back to its all-time highs. So this whole time for 10 years, very tough name to trade, just trading range bound, $20 range, not doing much. Now that it's finally above its all-time highs, the path of least resistance is often higher. And that's where we want to focus on this name when it wants to get back above this all-time high. We don't care where it can pull into. We only care when it's going to get back above 129. And that's very simply when we want to get involved. Now, given this might take some time to set up, in the shorter term, we have this triple M, Dow 30 name. Again, this is not a blue sky breakout, but still a very technical level here. We can see this prior pivot going back to 2021. So as we wait for Gilead, there could be a nice tight short-term swing trade in this triple M through this 172.5 versus 170 area. Again, we're talking about 1.5% of risk here, and aim for like a move to like 180 where you get 5-1. So again, the emphasis here, Apple risking 1%, Gilead buying through all-time highs when it's ready. This triple M, 1% risk through a technical setup. And we've seen multiple attempts at these levels already. We're not trying to buy them the first time. We're not buying the retest. We're waiting for very tight consolidations under technical breakout levels. So moving on to some good and bad trades from last week. We had this MEDP. Again, if last earnings had a very nice breakout that we took advantage of. And we saw the same setup happening a second time where we got into it last week, but it retested its all-time high and was met with resistance. Luckily, we had a very tiny kick here. We sold about 10% into that retest area, and this trade has came back where we got out the rest a little bit closer to break even. So we made a little bit of money in it. It's still just flagging out here. Nothing wrong with the name. And we'll just wait, as we mentioned before, for those support buybacks. So if this name pulls in and shakes out this 570, in a couple of days, then we can look for that potential buyback versus that shakeout low. And again, trading that range, buying up through 580, selling at 620, and trading the range just like what the market has been doing. BSX was another one from a few weeks ago where we bought up and kicked into resistance. Again, this is why we like to raise these stops and get out when the trade turns. We don't need to sit back. This trade could have been, break even or loss where we made some money, nothing too crazy. But again, we're seeing, like we're seeing with the market, range bound. We're not seeing a breakout in this BSX. We're seeing it trading in a range. So we just want to wait for this thing to pull back in, buy back up through 98, and sell into that range. Again, now, kind of got away from us, but you're seeing consistently with these charts a lot of just range-bound names. CACI was another one from last week. This was just a break-even trade. Again, like the Gilead, like the Apples, we're focusing on these names through all-time highs. This CACI was no exception. We were buying it when it was the most expensive it ever was. And we did get a $20 pop higher, but as it came back to our price, we didn't want to sit back through any pull-in. So took this off break even. It still pushed, 30 points higher from the entry, but we just took the break even trade. So moving on to a few other alerts. We had this FANG from last week. Again, energy name, talking about energy sector being pretty strong. This FANG is Probably one of the best, bases out here. 200-day catching up, everything you want to see. Still looks good. Stick with it at this point. Just keep like a break even stop first 150. But nice entry in that one. This Regeneron, we had a taking profit alert. Again, a few weeks ago, we had an alert in Regeneron in this earnings flag. Regeneron gaps up on earnings, start to consolidate and flag out. 200-day starts active support. We buy through the break of resistance, and our buddy Joe's been riding this thing higher every day. And then we had those 2 inside days last week. Again, we talked about healthcare being very strong, talk about the retest areas, profit-taking areas, and this Regeneron was no exception to that rule. So we had 2 inside days. You have some indecision after this major run, just like kind of where Apple was this week coming into today. Either it's going to want to break higher, you stick with it, wants to push lower, take the profits and move on. So we had that alert fire off this morning at 775. It's since dropped $25 from that alert. And this is a nice 100+ point swing trade on 10% risk. This was a 10-to-1 trade. You had one entry, one exit, easy trade, kind of set and forget. And that's exactly what we try to focus on here at Big Picture. Next up was the CBRE. Again, range bound, buying up through support as it trades in the range. Want to buy up through support, sell into resistance, and continue to trade these ranges. Moving on to some other names that have been mentioned recently. We talked about, again, Netflix. We talked about avoiding this name post-split, and it's still not traded higher than where it was pre-split. Typically with these names, you want to wait at least a month after the split before you want to look for anything with this name. So again, Netflix, just big avoid, let the dust settle with the split and circle back in time. This BMY, we had a member that bought it back in the beginning of November and was looking for a new entry. And we're just seeing very clearly that 50 has been resistance for many, many months now. We saw the pullback. So when he was in, here's the pivot low, gets back up to 50, puts in a new higher pivot low. Now you want to let this thing pull in some more and get tighter and tighter, where eventually, you can buy it through 50 and you have, a dollar risk, where right now, if you're buying it through 50, you got $5 risk. So still need some time, but when this base breaks, should have a nice little pop in it. So keep an eye on it, but not ready just yet. We got this EDU, again, nice base that's been setting up for some time now. We had that breakout, and now we want to just keep a closer eye the next time it gets back up to this 56 for that base breakout. Walmart, Abby's been doing a great job with. Again, talking about these range-bound names, we've had quite a few trades in Walmart over the past few months. We were buying through this 100, kicking into resistance. We bought it back through 96 and kicked into this like 103 area. Abby took it. I remember she took a trade through that 104 into the 109 area. And then more recently, she got back into it again through 104, took some profits yesterday. And now the name's at new all-time highs. Now on the flip side, Walmart up 20% this year. Flip side, you have Costco pretty much flat for the year. And we had a few members shorting this, this break of the support. Again, not the biggest, drop in the name. It is tough shorting these really expensive names, but on the flip side, you have Walmart breaking out higher, Costco breaking out lower, and members taking advantage of price action in both directions. So next up, we have this CRSP, biotech name. Again, healthcare strong, biotech strong. And we have this CRSP basing out here under this 55. Now, we do have the 200-day that's been acting as resistance in the short term. And that's where we mentioned in the newsletter and in the chat to just give it a week or two. Let it pull in, let it set back up, let this 200-day start to come and crawl underneath and act as support, and then buy through this 55. So keep this one on the radar, but it's not ready just yet. Big thing to avoid. Again, this is why you want to avoid, kind of the gimmicky flash in the pan names you think many years ago, like anything Kathy Wood was doing recently. the guy was buying all the Bitcoin he could and, financing, stock sales to buy more was the coolest thing since sliced bread, you know, a year ago when it was at 500. It's now effectively at 52-week lows, throwing us off that share price. So this is, why you want to avoid those very complicated, you know, niche ideas. So it's MSTR, big avoid these things at all costs. So the big thing for this week is just expect this transition into a range bound market where you want to be buying off of support and selling into resistance. We are currently at resistance, so you want to take that into consideration. Let the market pull in a couple days and focus on buying up off of support and selling into resistance with your ideas. So any questions you have, you can always comment below. I'll be glad to help you out.